Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the stocks that I think is really intriguing in the housing market is Zillow. This is a company that is a digital company. It's a platform. We don't have to deal with buying physical goods when you're buying homes, but yet Zillow is going to benefit as the volume of home sales or the number of home sales increases over time. So this could actually be a great way to play the housing recovery without actually buying something like a home builder. But we are definitely in a market lull, and we're seeing that in some of Zillow's results. So I want to dig into the numbers and show where I see some bright spots for Zillow that should end up hitting the bottom line in a big way long term. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Don't forget to subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing. I'll link to that in the show notes. And I want to go right to the recent results. A lot has changed for Zillow over the last couple of years, and we're starting to see the impact of that. They got out of the iBuying business. It seems that they basically got out unscathed, which was really good news for investors. But now we're at a phase, it's a low point in the market that Zillow's generating a net loss of negative $35 million. But you can see that adjusted EBITDA was positive $110 million, and revenue, $506 million, was better than their own estimates. But we'll kind of get into exactly where that money is coming from, where there's some positives and where there's some negatives. The trends for Zillow's app or website are also not hitting in the right direction. Monthly users, 226 million. That's a big number, but down slightly from a year ago. And visits down 8% to 2.7 billion. Here's a look at the revenue trend over time. You can see that 506 million is actually up pretty significantly from the fourth quarter, but essentially flat year over year. This is the weakness in the housing market that we're seeing over the past year. So just wanted to show that to give some context to where revenue is sitting right now. On the residential side, this is basically the core business for Zillow. Primarily, the primary revenue source here is realtors advertising on Zillow's platform. And that revenue is down from $392 million a year ago to $380 million. So again, not heading in the right direction, but we are in a big lull for the housing market overall. So this is where if the market does pick up, we could see this jump pretty quickly. The other thing to note is that residential revenue was down 3% year over year, but the housing market transaction dollars was down 22% year over year. So Zillow is a bit of a hedge against the decline in the housing market, and we should see really significant upside if their transactions do pick up, because realtors are going to need to reach people with something like Zillow. So I do see upside there, and I think it's positive that we're not seeing the same decline in revenue as we see in the industry overall. This is where you're starting to see some strength. Rentals revenue up $20 million to $91 million for the quarter, and unique visitors up 4 million to 31 million. So this is another area where Zillow is trying to become the platform of choice for both renters and then people with rental properties or commercial businesses that have rental properties. And it seems like things are going pretty well. What isn't going as well is mortgage revenue. And this is a business where it seems like Zillow should be in a really solid position, be able to provide other services to people who are buying homes, but they haven't been able to translate that to growing revenue. Mortgage revenue, $24 million, down from $29 million a year ago, despite originated loan volume jumping pretty significantly to $336 million. On a net income basis, you can see that net income was negative 35 million. Adjusted EBITDA was positive. Most of that difference was because of stock-based compensation. So stock-based compensation is not a cash cost. That's why it's not included in adjusted EBITDA, but it is a cost for a business and for investors. That's why it is included in GAAP net income or GAAP loss. For the next quarter, or the current quarter, management is expecting total revenue of $458 to $486 million, and adjusted EBITDA will be down slightly to $67 to $87 million according to their guidance. So again, we'll see a little bit of deterioration in the business this current quarter. The other thing I'll note is right here, this is just a snapshot of all the information about Zillow right now. Cash and equivalents, $3.3 million on the balance sheet. There is $1.9 billion of debt. But if we pull that out, the total enterprise value is $11.5 billion. On an enterprise value to EBITDA for the next 12 months, that's what this NTM stands for, 26.7. That's what analysts are estimating. So this wouldn't be a cheap stock. But again, what we're looking at is there going to be a recovery in the housing market? And does that drive higher growth and, as a result, operating leverage that will help Zillow on the bottom line? I think that's the best case scenario. A couple of positives to take away from the quarter for Zillow. One is the market share, the revenue that they're generating compared to trends in the housing market overall. Revenue is down 3%. Overall housing transaction volume down 22%. So that's telling us that Zillow's position in the market is relatively strong. We're also seeing growth on the rental side of things. So the platform strength is getting a little bit stronger. The question is, when do we see a recovery in the housing market? This is one of those things that it's basically out of Zillow's hands when the housing market recovers, or what the price trajectory of houses is going to be. But that's what's ultimately going to drive the company's revenue and growth in the future. So I think this is a really well-positioned company, but the financials may not improve for a couple of years if the housing market remains relatively weak. So that's the kind of thing that we want to consider as investors. Keep that in mind. But the positive is you got that growing rental revenue. So at least there's a pretty significant piece of the business that is growing. And at the end of the day, there's not a lot of competition for this specific spot where Zillow sits. It's effectively a verb in the housing market. Just look it up on Zillow. I think that's a good position to be long-term, even if we're not seeing that quite in the bottom line yet. But what did you think of the results, and what do you think about Zillow stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.